Hello, Warriors. Dollar weaker today. Stock indices are exploding to the upside. Anyone know what lit it up besides my call to buy it on the eclipse last week, the
Wall
week
Street
before?
Journal.
What is it?
It's the Wall Street Journal saying that Trump is going to basically dial down on the April 2nd tariffs.
Okay.
Right.
All right. I thought I saw something about Canada. They worked something out. Anyway, that was a gap higher opening in S&Ps. All right, Michael, how are you? RC, Ingmar, RJP, Ryan, I've already heard. Mike Bergman, Hugo, Glenn, Richard, Laura. Okay. So, the most unusual thing on the screen for me is what's happening after last week with 10-year yields, because I don't know how many times I thought we were going to head higher, and then it looked like we had a breakdown, and now it looks like here we go again. So, this was uh, reducing QT, I believe, right? Okay, and then here we are again. So it's still a tough call. TLT just made a detour. I was looking for about 88 here, and then had this one more move. It still looks like equality could take it down here, and why not now, especially if S&Ps are blowing off to the upside. So this was going to be the week I was going to be looking for short. So I think we finally got to 38. So we're right at 38%, 57.50 right there. I don't know. I'm still thinking, you know, halfway to I'm not even against 61.8 happening here. There's a lot of confluence. You have moving averages and you have trend line breaks and a lot of stuff. And this 59.20, if you don't remember, because it was almost a whole month ago, was really big. See this? That was a Dees raid where they held it, or this was a Dees raid. Then they held it again here, and he had a false breakdown. But next time through is when we had the big breakdown. So that's another confluence up there. It seems like be a pretty tall order for it to get there this week. But if people are going to feed on this, that he's going to maybe do the same thing before April 2nd with other countries, or maybe China, we could get there.
I thought everyone was saying on Twitter, and every economist was saying we're going back to 4,800.
Well, yeah, but Ryan, you've traded a long time, so
yeah, no, I know. I'm not talking about you, mate. I'm talking about the usual suspects you get coming out every time there's a dip in stocks and the world's ending.
All right, yeah, but you could get to 4,800, and here's the route. Yeah, this is a failing rally. Eventually, failing rally, and then if it got to 920, look at all this. And it's 1.618 of this. This was 600 handles. That'd be almost 1,000 handles from this level 59 up here, and that gives you 4,900. So I can make a technical case that it's not impossible for it to still get there. I that's why I'm looking to sell rips. Apple's getting closer to where I want to do it. I'll probably start halfway. Halfway is 234. That's still 16 away. Or, right in here, 227 is halfway. So Apple, I'm looking to short. I think you could still short Tesla as long as panels keep falling off. And NVIDIA, I was looking for, up here, 128, 130. So, I welcome this rally. I don't know. Go ahead.
I think it just shows the difference between, how people can get sucked into the sentiment and the headline grabbers and the clickbaiters. A week ago, this was going to 4,800 and the world was ending. and now we're rallying, and what, all is right in the world all of a sudden.
No, well, I don't know. Everyone here in F.A.C.E I think people here in our community,
they knew.
and that's, you know what? That's all that matters to me.
Exactly.
Okay, is that the people that are hearing our voices, that they're not getting caught up in, the majority opinion, and we're in the majority sometimes, but we talked about this. I know I did. Talked about that, that tactically it was the wrong time to get bearish. There were 4-hour divergences, but long term, here's another reason to be bearish, that this wasn't a bottom. Okay, I mean, look at that. All right, look at the momentum to the downside. Long-term lows aren't made like this usually. Okay, they're made where there's some accumulation that happened, and retesting of lows and base building, and this was just get to a downside level, move sideways, and now up from extreme oversold positions. So I guess the theory of the dollar being tested out, that I'm thinking that when the market's up, the dollar should be stronger. What do you think of euro here? Do you still think we have lower coming, especially if yields get through this 433 again, or try it?
It's possible. We again, a lot of people looking for this one to fall out of bed last week. We got down to my next level, 108, 107.95, and we bounced from there. So, but I still think this is on the clock, because we can't make a decision around this 108.30.70 level. We can't stay below it. We can't stay above it. But I think the longer it goes that we don't have a go at those highs, then the case builds to seeing a deeper correction in the euro. But we're month end, quarter end, Trump end, all that stuff coming. So you just got to watch the price action. I did take a long against that 108 on Friday. I chipped a bit off. My stops at entry now. I still got my 105s, so I don't care. But it's still got to do more on the upside.
This I think has to hold 83.40.
Yeah,
what do you think?
This one I wouldn't touch it. If you're not in anything and managing, I wouldn't touch it, because we've got so much stuff coming from the UK this week. We've got CPI data Wednesday. We've got the spring budget. We got the fiscal forecast expected to cut growth in half. We got retail sales on Friday. We've got gilt auctions. But this Reeves thing, the spring statement, is going to be a big one for the quid. If investors don't like it, then the pound's in trouble.
Okay.
So
yen,
I think euro sterling, I think is, we could be 85 or we could be 82s. It's one of those moments.
Yeah, I'm thinking that this looked pretty good, and this kind of looks corrective to me. After this happened in a hurry, got from point A to point B, at least this wave. I think Greg would call that impulsive. And for the dollar to weaken, euro should lead it. Okay. And so pay attention to this if you're a dollar bear, dollar bull, on which one you go for. Okay, so I still have a bullish bias on this. Why don't we talk about the yen?
I'm a bit long that euro sterling, just on the back of what's happening this week. I don't think it's going to be good news, but we'll see. But sorry, mate, crack on.
Well, I think it is, and you'll owe me a Coke. Here's and here's U.S. dollar yen. I thought that was it when we did this, just like with the yields. And here we are challenging the highs from last week. Maybe we are going to 51. It's going to look pretty good on closes over 150 for at least a while. I'm not looking for 55, but 51 looks viable. That's where the top of the wedge was. And I don't have the fibs there, but I'm thinking it's some kind of fib retracement from the high at 58.
38.2 is at 151.25, and that's from the move from 159.
Okay, so there you are.
bang on it.
Maybe maybe it has that in it. Metals, if this will be the first time now, it's not doing it now, right? But we did diverge here. This was a confirmed high, but I mean, it's like the opposite of the S&Ps. Too much Mo may have diverged, but I can't see it with the naked eye. I'd have to put my cursor there to get a reason. And if you have to do that, it doesn't count. All right. Now, this one at this high was just a shade over 70 up here at the all-time high. And now if we get a rally to new highs, I think it's going to stay under 70. And I still like the gold-silver ratio to the downside. So there actually could be some kind of short in gold coming up from new highs. I'm not doing it here. I'm waiting for a divergent high in gold with a reading 70 or lower. And I rest my case. That's about it. My main thing is where do I put my shorts on in
On your legs.
individual? Huh?
On your legs.
Okay, I'll put it. All right. I
Put
didn't.
them in your
Hey,
head.
look, you know what? You're learning or you're dying. So now I know how to put my shorts on. I know Blake is with us today. Thoughts coming in, bro? What are you doing? What's top of mind on Monday morning besides getting up
Yeah.
earlier?
Good morning, everybody, or good afternoon, depending on where you're at, or maybe even good evening for that matter. Yeah, it's Monday, and markets are higher. Obviously, this tariff news, everybody thinks that that the news is going to be, it's going to be more targeted, and it's helping risk. Uh, one of the other things too is you were just talking about end of month, and we're gonna see end of month flows, obviously, which is another factor that we're gonna have to take a look at as we are moving towards April 2nd. So, obviously, if you're just looking at some of the headlines, everybody's thinking, well, the Trump administration is going to dilute, the tariffs here, and it's going to be a little bit more targeted, and maybe at certain sectors or whatever. And so that is what's driving futures right now. One of the other things, like I was just mentioning, the end of month flows. If you this is in the Forex Analytics chat room, and you can see like just some preliminary numbers. It suggests that there's going to be some dollar buying and some equity market buying and dollar buying and euro selling and European equity market selling. And the reason why that would be is because we've seen such a big divergence between, I mean, you can look at the S&P, just go ahead and look at the SPOOs here and see what's happened with the S&P and this sell-off that Dale, that you're referencing. By the way, we are almost at the 200 DMA, 38% retracement, big resistance coming up that we're just kind of nudging our head against. But take a look at the difference between what the S&P has done and just go look at the German DAX. You can look at most any other market, but look at the difference between those two markets. So you're going to get some rebalancing at the end of the month, and that's what is kind of preliminary right now. So that's something else to keep in mind. But one of the things that happened overnight, and one of the things that I've been waiting to hear this week was all of these PMIs. And well, Ryan, let me ask your opinion before I give my opinion. What do you think about the PMIs that came out? I was impressed with the services or the manufacturing PMIs for like Germany, but what are you thinking?
Well, you might have been impressed. I was less impressed. Yeah, we had a little bit of an improvement, but still a lot of work to do, particularly on manufacturing. You got France still in contraction on both, Germany contraction on one. I thought we might have seen a bit more of a optimism boost on the German spending, but like the zoo, it's been minor. We've got the IFO tomorrow, so that might be another indicator. But it's looking like firms in Germany like, okay, well, this is coming. Let's see what happens, rather than starting to get the engine started again, if you like. And the UK PMI, that was crap in manufacturing, but much better in services. But then again, you read the details, and the improvement was only in certain pockets, as they call it, of the services industry. And meanwhile, there's a lot of uncertainty, a lot of worry, jobs still down, and it's not as good as the numbers suggest.
But you were, I'm not going to, I was going to say something, but I'd rather you explain it. This is going to be a big week for sterling, isn't it?
Yeah.
This is going to be a huge week for sterling. Why is it such a big deal? And I know we have to wait until Wednesday, but why is it such a big deal?
Well, long and short, we've got this spring statement, as it's called, which is sort of like an update after the budget last year. And supposedly there's not meant to be any changes made, because you did all that in the budget. If you have to go and do something, changes, 6 months later, then you're in trouble. So the market is not trusting that Reeves has got control over the economy.
Well, she's got both hands on the wheel. What's wrong with that?
Yeah, which wheel? The wheel, and the wheel's not attached. The steering wheel's company not attached to the car. That's what the market thinks. So
I feel like it's a Flintstones car.
Yeah, it's like a clown car. The wheels come off. But yeah, so this is gonna, long and short, I mean, forget the details. If you're in America, you don't care about welfare bills and all that stuff. All you need to worry about is this going to be another confidence exercise for investors? If investors like it, fine, the pound should be supportive. We move on. If investors don't like it again, they're going to put a penalty on those yields, and they're going to hammer the pound again. So
I want another Liz Truss moment. Are we going to get another Liz Truss moment?
I said it a week or so ago. We could be at another one of those moments. She has dialed stuff down since I made that call a little bit. Like, she was having a fight with her own cabinet over some of these measures, and now they've agreed on the package. So she's had a bit of conceding. One of the other things she was going to do, she's now kicked to the actual budget later in the year. So she has been, as I say, dialing things down a bit, but still she's got to pass the market's test. And if she doesn't, then, as I say, the pound could be in for a bit of a spanking.
Okay, and so that's going to be probably and you said it on the Flow Show, and this is, I was trying to get you to talk about your show, damn it, but I'll do it for you. Fine. You notice it is 5 o'clock in the morning for me, and I've been up since like 3:20, and I'm sitting here trying to pitch your show that you've been doing today. Or I'm trying to get you to do it, but I'll do it for you. How about that, Ryan?
Yeah, go ahead, mate.
Ryan's talking about all this on the Flow Show. If you guys want to, and by the way, if you live in the United States, just for the remainder of this week, you can actually listen to him live. K-Man's not there because K-Man's still traveling in Japan. He should be back, next week?
Yeah.
Next week. He's coming back next week after seeing his grandchild. But you guys should listen to Ryan live. I actually listened to the last 15 minutes, and then I go back and listen to the very beginning while I'm waking up, getting ready for everything. So if you want to listen to Ryan live, do it on the Flow Show. Now he was talking about the euro sterling, but his your point was that, and I still see it as a very much of a bull flag at this point. But your point during the show is we could be at a much different price by the end of this week in euro sterling.
Yeah. My bias is bearish for the pound over this, because the proof has been how it's reacted over Reeves so far, and I see nothing from her that's going to change the market's mind. So, but you've still got to be objective. If it is positive, we could be down at the low 83s into the 82s, maybe even getting down to those prior lows. But if it's bad, we could be up at the 85s. So this is a moment where I think there's a high risk that we are in a different place come the close of the week than we are right now.
Okay. Thank you, Ryan. Steve, I see that you're here. I'm gonna come to you well, actually, you know what? I just wanted to tell Jim, I saw your question on the dollar CAD. It is getting a lift this morning. That was, if you're in the Again, if you're in the Forex Analytics chat room, just about I don't know, about 15 pips ago, I was like Looning's catching a bid here because it is getting a little bit of a lift, but I'm not super excited about it just yet, and I'll tell you why here in a moment. But Steve is here, so I want to see if Steve's got any comments about the markets this morning. And Steve, are you here? Hey, Steve.
Hey, mate.
Hey, I was going to ask you real quick, and I know you're probably in between things right now, but I want to get your overall thought on the euro and where you think the euro is going here. I mean, we've seen this obviously this really nice rally in recent weeks. Looks like it's holding. I think that your currency is going to be, it's going to be time to come visit the United States again. You're going to have to come back and, this time instead of me taking you to Las Vegas and the Grand Canyon and staying at my house for a couple of weeks, I'm actually going to have to take you and your family over to Disneyland. You're going to have a lot more money to spend, in my opinion, over the next year. What are your thoughts with the euro longer term here?
Oh, longer term.
Yeah, I'm talking not like over the next week. I think the euro, like I'm talking over this year. I'm plotting your trip for October this year so you can come every 3 years to the United States and stay with me. So.
Longer term, it's not an easy prediction to make, I have to tell you. In general, we've seen that we're not really moving anywhere fast. Right. If you look at the market since, let's say, 2015, you'll notice that the average of the Euro USD during these 10 years almost has been a little bit higher than where we are. I would say, eyeballing it, I would say that the average price during those past 10 years has been, let's say, at around 112. 113.
Yeah.
So it's more than obvious that the very, very long-term trend is lower, yes. But on the other hand, there isn't really a strong trend during the past 10 years. Yes, we did create a lower low during that period of time, but overall, we're more drifting in a large range. And I don't think this is coincidental. I think that on one hand, this is the result of central banks syncing with each other and trying to mimic one another, right? Follow each other's policies. In the past, we had even big central banks differentiating their policies substantially from one another. But, this has stopped being the case in many years now with very few exceptions. So that's number one. Number two, long-term predictions are not easy at the moment because the political scene has become very, very complicated.
Oh, just say the Trump factor.
No. It's not exclusively a US thing.
Yeah.
You see that in Europe there are a lot of developments as well, and a lot of turmoil as well, and a lot of change in
Fiscal.
in bigger parties that are now losing power, newer parties emerging. Policies in general shifting to the right, mostly due to people being tired of illegal immigration, B, of economic policies that obviously don't benefit the masses.
So you're saying that a lot of Europe is starting to flop right, like the US did.
They started before us.
Exactly.
Yeah, they did.
Exactly. Yeah.
All right.
And this makes predictions very, very hard in the long term. Very hard.
Yeah. All right. Well, like I said, I think you should start planning your trip to the US again. And I think you're right. We're going to be trading in the teens, probably sooner rather than later. Jim asked about the dollar Canadian, and I'm going to just tell you, I'm just going to repeat what I said on the week ahead video. We're probably going to have a resolution of this next week. This is a triangle chart. You know, Carney's been, if you listen to Carney and you listen to what he has to say, he's very much
tough.
You know, we're going to fight Trump. You know, we're not going to be the 51st state. He's very much continuing on.
I bet he could kick Trump's ass in the boxing match.
That I would agree with. I would definitely agree with.
Why? Because you can't see our president being able to do the Ali shuffle.
No. And speaking of which, you know what?
There is an age difference factor as well.
Foreman. George Foreman.
Yeah, you know, I was George Foreman. Obviously, rest in peace. He passed away this weekend, and I have a picture of him and I from about 15 years ago. I spent like 15 minutes with him. He was speaking at an event I was at and got a picture taken with him. And it was just after he released, well, just after, like 5 years after he released the George Foreman grill or so. And so he was like
150 million of them.
He was on cloud nine, and I'll tell you what, he was probably the most gentle soul person I've met in a long time. That's a celebrity. And I spent like 15 minutes with him, just chit chatting with him in the back. And he was just a really
after
nice
spending
guy.
a few decades, you know,
getting your brains
boxing the life out of your opponents.
Maybe that made him a little nicer, I guess. But I'll tell you what, his hands were double the size of my hands. Like, and I have like just average size hands, you know, I don't have like some big, but his hands were literally twice the size of my hands. And I was thinking to myself when I was, you know, shaking his hand, and I was like, if I got hit by one of those, it would literally knock the head off of my shoulders. It was
the vast majority of heavyweight boxers can kill the average person in, you know, one punch.
Right. No, there was no doubt about that. I was just, you know, I was desperately looking for the photo this weekend. If I can find it sometime this week, I'll post it. It's he was just really, he was on cloud nine because, you know, this is his post, you know, boxing career, and he had his he was selling so many of those George Foreman grills. We even had one at our house when they first came out, and it was great. I used it early on before I had kids. It was awesome. So anyway, sorry, totally got off track there. But looking at the dollar CAD, I guess the point I want to make here is I think we're going to be breaking out of this triangle probably after we figure out what the tariff situation is on the 2nd. So I wouldn't get too carried away with it here. I think that you know, the upper end and the lower end of its triangle is pretty well established. So you're talking about maybe 142.80 and then, you know, 144. And then obviously if you start breaching, you know, the highs or the lows here, that's when things accelerate. But you can see it's a nice triangle consolidation. So and like I said, I think we're gonna, despite the Canadian data that's coming out this week, we've got I think Canadian retail sales, if I'm not mistaken. I have to I'm looking here.
No, that was last week.
Oh, is that last week? I don't know. You know, do we have any Canadian data?
I don't think we got a lot. We got a bit of US
not
data.
A lot. Yeah, so I think we're going to be driven by tariffs. I mean, and the market, let the market figure it out. I'd love to give you my opinion and say, oh, I think this is going to happen. Well, because I don't have an opinion right now, but I don't think opinions really matter. You know, opinions are like buttholes. Everybody's got one. So you're going to hear a lot of buttholes. But listen, the market's going to decide what it wants to do from here. And then you will have to react. I'm going to have to react. And I'm just going to leave it at that. We have today flash manufacturing PMIs coming out in about an hour and 15 minutes. You guys make sure you stick around, or not stick around for that. Make sure you guys are looking at the calendar for that, because that could be a driver of today's moves. Remember, we've been high on US exceptionalism for years. So watching the US economic data this week is going to be really important, especially today. We do have the Bank of England Governor Bailey. He's speaking. Should we expect anything out of that, Ryan?
Probably not. Usual rubbish.
Just more rubbish, but we as Ryan pointed out, we have the spring statement on Wednesday, and we also have UK CPI on Wednesday, I believe. Yes, we do. So
Yeah.
those could be market movers. Don't ignore the fact that we're just consolidating around the 618 retracement on a long-term basis in sterling. And then one last thing I want to two last things I want to point out. Obviously, with the S&P, yeah, we're up this morning. We're at the 200 DMA. We're at the 38% retracement, flag resistance. Also, keep in mind that Bitcoin's nearing 90,000, and that's a big deal to me because that's not only channel resistance, but also the 38% retracement is right up here as well. 50 DMA. Yeah, I've for the last couple of weeks, you listen to the week ahead video, I've been looking for Bitcoin short around 90,000, and I think we can see it this week, especially if risk appetite stays elevated like we're seeing it. We might be able to see 90,000. I wouldn't want to be a buyer, or wouldn't want to be a buyer unless we get a, well, actually, I don't think I'd want to be a buyer at all because this is a long-term, distribution, Wyckoff distribution pattern that we're seeing here. I think this is more of a longer term reversal. So selling rallies is what I'd prefer to do in this situation. Ryan, you're doing a great job without K-Man there. I know it's a solo show. You're just kicking ass. So thank you. Keep up the great work. Steve, it's great to hear your voice this morning. And get your views. Dale, it's Monday, and what can I say? I'm struggling to get up as early as you, and I have not fully adjusted. So
and you never will.
I know it, I actually end up doing after about 6 months after the time change.
That's your mind playing tricks on you.
Maybe that's it. Well, have
I'm
a
used
great
to
interview.
this now.
Have a great interview, and I do
Thanks.
want to say, you guys, $1 for 10 days. Come join the Forex Analytics community, or jump in the trader funding program. Remember, we do have the 30% off one-step assessments till the end of the week. I think it's the 30th or 31st, because I don't think it's actually the 31st. But take a look at the pricing. We do have a discount code available to you for the one-step assessment, or if you want to get instant funding, you can do that too. There's two types of funding assessments that you can do. So, check that out. Best way to take advantage of this volatility is with our community. So, Dale, have a great interview with Jim,
Thank
the
you.
VIXologist. Speaking of volatility, he's here.
Yeah, Jim was warning people at the top. I remember the quote because his VIXometer was flashing some danger, and he said it in a very gentle way. He said, "Can everyone out there just be a little careful, please?" Because there was so rampant bullishness happening up there. So if you want to keep an eye on the VIX, besides seeing the number and know what it means, term structure and everything, we have the right guy here. And Jim, you said you're coming here. You're here, but you're in a secret location. I'm wondering, you've got my curiosity piqued. If you told me, it wouldn't be a secret location anymore, right?
That's correct, Dale. Can you hear me okay?
Yeah, I got you.
Okay.
All right. So anyway, you're undercover. Let me ask you this.
I'm hanging out. I'm hanging out at a conference today and tomorrow. It's pretty rough. I had to play golf yesterday afternoon.
Oh, one of those.
I'm gonna have to play golf again this afternoon. It sucks.
Oh man, you're gonna need a massage after 36 holes. Anyway, I wanted to ask you, when it comes to the VIX, this pullback, even though that we're getting, seems different than recent VIX spikes and then give it all back in a hurry. Do you see that as well? Sometimes how a market acts after a move.
Yeah, absolutely.
So does that kind of speak to that there could be another wave of VIX to the upside, and this is more like a correction, the pullback we're getting in VIX here?
I never know, Coach.
Okay, it's fair.
And none of us do, but I kind of look for breadcrumbs. I look for clues.
Yeah.
It's the old Joe Walsh, looking for clues at the scene of the crime.
Yeah.
Life's been good. And so, yeah, this most recent move by, the market and the VIX was definitely different than what we saw, for example, in August.
Yeah.
And what we saw around the Fed meeting in December. This was there you go. And I'll pull some slides up here in a minute. Okay. But, and what was interesting about this one was, it's kind of symmetrical, right? From the lows when S&P topped out that third week of February, we stair-step higher, and then we have turned around and started stair-stepping lower. So where the prior two were really much spikier, and the band from the base to the next base to a return to base was much narrower than this one. Look, there's so much stuff going on, both in terms of, politics and the economy and Congress and everything else, that, I subscribe to the high likelihood that, our current administration will make volatility great again.
Okay, got it.
He crushed it to super low levels in 2017. We all remember the year that VIX went to die.
Yeah, it was archaic. The VIX was broken.
Well, and the VIX has been broken many times since then.
That's what they say.
You listen.
Yeah.
But
I'm thinking, because I look back at every spike here, Jim, and every spike got back to, the 14 level,
right?
The 14 level. 14 level, even these, they all got back to these low levels, which were still a higher level than the historic lows here at 1163. But to me, this looks like, I don't know if we're going to grind. To me, it looks like it's set up in here over the next week or so to make another move to the upside. I think this was more of a, not panic. It was orderly. Wasn't it orderly?
I referred to it on Twitter as the orderly disruption.
Okay. All right. I like, great minds. So, we're probably 78.6 back if you want to do a fib or anything, but let's see what you have. People have heard enough of my blabber. So, Barry, what about Fort Knox?
He was wondering if I was at Fort Knox.
Oh, I see. Okay.
Counting the gold.
There's nothing to do there. Anyway.
All right. Can you see my screen now?
Got it.
Okay. So let's wind. And this is a somewhat shorter trip than some in the past. The question you were asking, is it safe? And we'll find out. This is one of my favorites. Dale, you and I were around when the movie Marathon Man came out. And Dustin Hoffman got, caught in a bind with a guy who wanted to perform oral surgery without anesthetics.
Yeah.
But anyway, is it safe? I don't know. Let's talk about it. This is, taking that chart of VIX, and, we had that August quote unquote crash, which, was by any measure historically, the fastest rise and fall we've ever seen, of a spike of that magnitude. Then, we had what I point to the Fed meeting, in mid-December, because that was, again, just a couple day thing before people settle down. And now we're having, and, is this a growth scare? Is this rotation? Is this, I don't know what it is, but, I call it a growth scare because I think people are, concerned about the Mag 7 that have been driving the index values. People are concerned about whether inflation is coming back, staying low. There's a great deal of uncertainty that all goes to whether, the economy is going to continue to grow and support the stock market.
How about this, Jim? Could it possibly be, with dollar weakness, a repatriation of assets by other countries to buy what is relatively cheap compared to the U.S. market, even though and that's the reason for their outperformance?
Yeah, it's kind of interesting. In addition to staring at the VIX on a day-to-day basis, I run several systematic strategies that are based on, different look-back periods and relative strength. And what I picked up, this is going back several months now, was this rotation outside of the U.S.
Yeah.
And currently, those models don't have any U.S. exposure. It's all international. So, and
that's
you know,
a big
then you
shift.
talk to
That's
people,
a big shift. Big shift. That
it's a huge shift.
when's the last time that happened? 10 years ago, 20 years ago, 30?
Well, with any follow through, for sure. You go back to the aughts, and emerging markets were a great place to be, but that has not been the case really since the global financial crisis. So
right.
And is this going to sustain? I have no idea. You talk to people on the ground. You've got a bunch of people that you talk to every day in Europe and parts of Asia, and they're all like, "Well, hey, you know what? It sucks over here.
Well,
things are not great."
I mean, the bottom line is, I don't care what your politics are with what Doge is doing, and the fact that basically there's a lot of what we're doing is more towards austerity,
right?
While Europe is stimulating, China's stimulating. We're on the opposite end of what it's been for the last, since central planning, really after the financial crisis.
Yeah, and look, I hate all politicians equally.
I'm in that party.
As a former participant in the military-industrial complex, I've seen that $1,000 wrench. There's no question in my mind that there are places where we could save a lot of money in all of the activities that the government's involved in. Are these the guys to do that? I don't know. Are we going to break some eggs along the way? Almost certainly.
Yes.
And so I think anybody who, let's just say that the economy weakens and the stock market takes a crap, anybody who is surprised by that is just not paying attention. And so I'm not saying it's going to happen. I don't care, frankly. It'd be a lot nicer if things went along smoothly and, we made a few changes and people were happier and people had better jobs. I play the cards. I play the cards as I see them.
Yeah, the price action. Exactly. But, you really have to be an ostrich to not see that we either are in or headed towards a constitutional crisis. I've never traded a constitutional crisis. Have you? I mean, what were they trading in 1780?
Right.
I don't know. So I think that's, and I know a real smart guy, this guy, George Robertson, Bicker and Brattle. He was long the market all the time. And when I asked him why he was getting out after the election, he said fear of a constitutional crisis.
Right.
And he just went ahead and bought Canadian dollars, and he's, kind of out of the market now. So we'll see. Let's move on with the slides.
So this is, looking at these volatility events mapped against this thing I've created called the VIX Mix, which, for people who haven't heard about it before, it's a compilation of right now 17 component indicators of different aspects of the market and through the lens of volatility. So again, the arrows point to late July, August, the little Fed scare in December, and then this most recent hack. And what you can see is that, particularly the sustained moves down in the stock market were consistent with bearish readings and frankly, divergences in those readings relative to the equity markets, right? You go back to July, equity markets had been rambling higher. There was a little pullback in April that's not on this chart. But generally, markets were going lower left to upper right, and the VIX mix was saying everything's cool. There was a high in the S&P on July 16th, I think it was. And, this was not confirming that new high. Now, does that work every time? Nothing works every time. Right. But it basically said, keep your eyes open. And as that pullback started, and I think, let me go to the next slide. Yeah, as that pullback started on July 18th, the VIX mix went bearish. So 2 days after the high, this was saying, hey, something's not right under the hood. You better be paying attention. It got bearish and it stayed bearish through that surprise spike, in August, first week of August. Oh my God, what happened?
The unwind. Yeah, but you were getting tells about it and warnings
and I don't,
prior.
I don't care why. Was it the yen? Was it the dispersion trade? There was a crypto hedge fund that got a margin call over that weekend. There's a whole bunch of stuff going on.
Maybe that's your next career as a financial journalist.
No,
because the reporters will always tell us after the fact.
Exactly.
They know what happened.
Well, and this, Dale.
After it happened.
Human beings need a story. We need somebody to tell us what happened and why it happened.
Yeah.
And I'm just telling you, it doesn't matter. Anyway, the next one. So this was around the Fed meeting, December 16th, 17th. So, Fed meetings are weird, right? Because half the time you get a little buildup of volatility, a buildup of hedging, and then it's a non-event, and the volatility just gets crushed, it gets squeezed out. This was one that was a little bit different, and I'm not saying this was one you could call, but what you saw on the 2 days before the Fed meeting was that we went from essentially from a high neutral reading down to a low neutral reading. It was dropping. It was telling you that people were hedging this meeting. And, there are some other things that I look at that suggested, there was kind of a low risk, long vol trade to be taken. Again, you never know if it's going to work out. But, again, there were signs for those who knew where to look. And in this most recent one, you had a S&P all-time high on the 19th of February. And, 2 days later, this thing was down 24 points and in bearish territory. And the 21st, was before the stuff really hit the fan. So again,
that was a tweet that that was a tweet that I saw where you were just asking people at least be careful.
Yeah,
that's all.
Yeah, here's a little closer look at that one, and along with this bounce, what you see back at that high was that you'd think all-time high for S&P, this thing should be bullish, it should be up in the green, and it was just not up in the green. It was basically at the same level it was at the prior high in January, the sort of post-inauguration euphoria. And so this was basically saying, okay, fine, you made a new all-time high, but we're not convinced that it's durable. And again, you had then 2 down days, and this thing went bearish before, you really had the full slide. So, again, if you had said, if this thing goes bearish, I'm going to get defensive, that would have paid off pretty well. And then looking at this bounce, going back to where you started, Dale, the one thing this shows is that the low for the VIX mix was registered on the 10th of March.
Okay.
The low for S&P was on the 13th. So, what you can say is, again, does every divergence work? No. But, you were up off the lows in the VIX mix when S&P hit its low. So
it's a leading indicator.
Yeah, you could say, hey, well, this VIX mix thing doesn't think it's as bad as it was a few days ago, so maybe we get a bounce.
Yeah.
Now, how do you play that bounce? I don't know. It's up to you.
Yeah.
And there was no guarantee there was going to be a bounce. So, you're probably waiting a day anyway. And that first, 1 day rally, was most of the juice so far. So,
Jim, if I used to trade a lot of VIX options until last August, and I was watching the VIX during this whole decline, which was a huge percentage decline in a lot of MAGA stocks, and 20%.
Yep.
And the average that's a pretty good hit in that period of time. I was surprised at how subdued the VIX was during that whole bearish move.
Yeah, and look, I think several things. Number one, again, it was if you take a line and you go from the lower left to the upper right on your chart in a straight line, there's no volatility. And if you take a line that starts in the upper left and goes to the lower right in a straight line, there's no volatility.
Right.
But we like one of those better than we like the other one, but there's zero volatility in either one. And this was one of those kind of stair step down moves where, I would suggest that, what we saw people, rather than chasing hedges, they were just taking off exposure. They were lightening up their Delta 1 positions as opposed to trying to hedge what they had.
You really needed the patience of Job to ride this whole decline, because there were several times it looked like, well, we could bounce from here, we could bounce from here, we could bounce from here.
Yeah, there were again, you can see it on the chart where you had several days of reversals before you finally hit the bottom, and there was nothing to say that final reversal higher was going to stick. The only thing that suggested it might, from through my lens, was that we were up off the floor of my volatility measures.
Okay.
So somebody asked
what
me
about now? So what about now with this recovery?
Yeah,
we're getting, we've been on the greedometer at extreme fear for a long time. So I don't think we're going to go from extreme fear to euphoria unless we are just going to have, maybe at 6,400 we'll be there. But
so
go ahead.
I've got one more picture and then a list.
Okay.
Somebody asked me a question. If this market, this past several weeks, because one of the things I said was, market action like this is just not bullish. Somebody said, well, what do you mean by that? And what would be a sign that the market was healthier? And one of the quick and easy ones from my perspective is to look at average true range. And the only trick to using average true range is you really need to look at it as a percent of the price, because as the S&P goes higher and higher, the average true range as a number is logically just going to get bigger with price. So this looks at the average true range as a percent of the S&P price. And, you can see that when it gets down below 1%, that is typically coincident with a market that's going up. And the last time we had that was, in December with that push right before the Fed meeting. And, we really haven't gotten back there, and we're at a pretty high level of kind of internal or day-to-day volatility. So this thing needs to keep coming down for me to consider that, this is a healthy move and one that might be sustainable. We're just seeing a continuation of significant, even though the close to close volatility isn't very dramatic. When you take into account the gaps and the highs and the lows, the trading ranges from day to day, we're still at, elevated volatility day to day. So,
well, they're going to take plenty out of it today, aren't they?
It sure looks that way.
So, what you're reading from now should would just a neutral reading on your VIXometer?
I'm really look. I have I have models that, as I mentioned, are positioned largely outside the U.S. On a day-to-day basis, we're on the vol side, we're taking it cautiously. Here's we had PMI this morning. I didn't see what it did. We got new home sales tomorrow, durable goods, jobless claims, and GDP, PCE, the Fed's favorite, quarterly OPEX on next Monday. I think some of this morning was, I think I saw a headline that maybe Canada. The tariffs are not going to be a big deal. But that could change this week, and, who knows? So, I think one of the challenges in this market is you either have to be a swing trader, or you have to be a very considerate, mindful, very long-term investor, who's putting money to work systematically and not paying attention to the day-to-day swings.
You left one thing off your list. The solar eclipse on the 29th.
Well, Dale, I'll add it to the list.
Just don't look at the sun. I don't care. I don't care, because we need your eyes, buddy, because you're our watchman on the VIX. You're my go.
I promise.
Okay.
So that's my story. If people want to find me, I'm very active on X, Twitter, at VIXologist.
He is.
And people can still go to vixology.substack.com and subscribe for free.
I would rather have a guy that has knowledge of volatility handling my retirement account than someone who just thinks you don't have to worry about volatility because you have a portion in bonds, portion in stocks, portion in cash. So think about Jim when it comes to that. And I appreciate you, getting away from your conference, bro, and be looking forward to your stuff turning a little bit more neutral because I'm looking to short this rally. I think there's more left in price and time, but I think there was just the intensity of the decline. Just in my training says, Dale, sell the next rally in case it's a failing rally between 50 and 61.8 back. So I'm going to have to execute what I've learned over the years, right or wrong. So I'll challenge the market to prove me wrong up there. Great having you.
Peace be with you, my friend.
Yeah, and great content. Follow Jim at VIXologist on X, and you'll start learning about his indicators, and maybe even have a chance to talk to him. So that's a wrap. Thank you, my trading warrior brother, and everyone else. People are thanking you, Jim, and everyone have a good day, and let's celebrate a little relief in the markets and start stalking at your fib levels. And that's a wrap. Don't just count your VIX derivatives, count your blessings. Right, Jim?
Absolutely. Peace be with you.
All right. Peace be with you too, Jim. Everyone have a great day. See you tomorrow for Turnaround Tuesday. joined the team in 15 minutes on the morning edge.